Hey traders, welcome back to the channel. It is Tuesday, February 17th, and I hope you had a nice long weekend and had some good trades today. Before I get into the news, I just want to talk about something that I think is kind of interesting because I was watching CNBC for a little bit this morning before the market opened up, and they had a guy on there who was saying some things that I resonated with, and it was funny because I had been thinking the same things myself. And one of the things he was talking about was, he said, we've lost unifying narratives in the stock market, because the interviewer was asking him, like, well, what's the reason for all this uncertainty and for all the chop and all the, up and down and the kind of tension that people are feeling? And he just said straight up, we've lost unifying narratives. There's no longer a thread of a story that can be woven when you see certain things happening. So when things are quote unquote normal in the market, if this happens, then that should happen. And so everybody understands that. And then when, things like earnings come out and a company beats on the earnings and has strong guidance and everything looks great, then it should be full steam ahead. But as we can see over the last, month or so, with so many companies announcing earnings and then they are just trading horribly the next day, you can't trust that a certain thing will happen just because something else has happened. So there's a high amount of volatility and fragmentation in thought because people can't be certain that if they see one thing, then that means that this other thing is going to happen, which is, something that everybody used to take for granted. Like, if this happens, that's going to happen. And it's no longer that way. So, the good news, as I've said on this channel many times, is when you are an options day trader like I am, that's not as important because you can simply get in and out very quickly of a position, either going long or going short. And as long as you're very nimble and you can read a chart and you can read candlesticks and you understand price action, then that's not really going to hurt you as much as it's going to hurt people who are thinking on a much bigger, longer term timeline. So anyway, with that being said, let's talk about what happened today. So as I said at the beginning of the video, we had a long weekend. President's Day was yesterday. And today we basically picked up right where we left off. That is divided. So the markets reopened today, telling two very different stories depending on where you were looking. So the Dow held its ground, barely budging, while the Nasdaq got dragged lower by the same force that's been haunting tech stocks all month: the fear that AI is about to eat the software industry alive. So here's where we closed. The Dow eked out a small gain, finishing around 49,525. The S&P 500 ended essentially flat near 6,836 after nearly sliding 1% earlier in the session before bouncing off a key technical support level. But the Nasdaq was the clear loser today, falling roughly 0.7% as software and semiconductor names took another beating. And that's where the tension is right now. Software as a service stocks like Oracle, Intuit, and Salesforce dropped between 3 to 5% on fears that AI tools will replace what these companies sell. CrowdStrike plunged after Mizuho slashed its rating. AMD fell more than 4%. Nvidia and Micron traded in the red as well. And this is all happening 1 week before Nvidia reports earnings on February 25th. That report could either break this sell-off or accelerate it. But here's one of the other things that's really interesting. While tech bleeds, other sectors are quietly thriving. Banks and financial stocks rallied hard today, helped by the 10-year Treasury yield dropping to a fresh 2-month low at around 4.03%. Lower yields mean cheaper borrowing, and that's music to the ears of lenders and credit providers. Apple was the one bright spot in tech today, rebounding about 4% after an 8% slide last week. Wedbush's Dan Ives slapped a $350 price target on the stock and called 2026 the year Apple plants its AI flag. That kind of conviction stood out in a sea of tech anxiety. On the earnings front, Medtronic beat expectations this morning. $9 billion in revenue, 1.36 adjusted EPS, topping estimates on both lines. But the stock still fell about 3% because of a $185 million tariff headwind this year, potentially growing to $300 million next year. A classic case of beat the numbers, miss the vibe, which is just, again, what I've been saying for the last month or so. General Mills was the day's biggest casualty, crashing more than 7% after slashing its 2026 outlook. The company now expects sales to decline up to 2% and profits to drop as much as 20%. Lower income shoppers are trading down to store brands, and the consumer squeeze is getting worse. After the bell, all eyes are on Palo Alto Networks and Toll Brothers. And tomorrow we get the Fed minutes from the last meeting, which could finally give us some clarity on when rate cuts are actually coming. So, again, the market is split down the middle, kind of an uneasy territory, very much push and pull in both directions. Tech is searching for a reason to believe again. The answer might come February 25th when NVIDIA takes the stage, but we'll wait and see. So until tomorrow, have a good evening, and I'll see you back here tomorrow afternoon. Take care, everybody.